Hello everyone, a very warm welcome to all of you. Today is Thursday, 15th of December, another weekly expiry we are expecting. And as we had expected, Nifty as well as Bank Nifty, they have completed their weekly targets. So Nifty made a high yesterday at opening and it completed the target of 18,685, which was our weekly market ka lagta hai target, and then slowly gradually it started retracing from these levels. Similarly, Bank Nifty also completed a target of 44,041, which was our weekly target. So briefly, right now we can see the Bank Nifty is above weekly range, but I'm expecting in today's action it should again come back into the range. There is no reason for us to extend the range to a higher level, because if you recollect in yesterday's video I had also mentioned that we can see, as per the OI data, about 100 points above 44,000 may be possible. So during yesterday's move we actually made a high of 44,151, right? So 150 point in excess of what we had expected, and from here these levels I feel we should see some steady profit booking, some decline. Okay, primarily because let's start with Nifty. So here in Nifty's chart, as you can see, all these things we have talking about, like Friday's low is important, and from there Monday onwards we have seen the upward rally. Then 1 2 3 pattern that we discussed, it is working well. So these targets of 1 2 3 pattern, now they are completed, like 200% almost reached, done. So I'll just remove these tabs, make this chart little less cluttery. What I see right now here on this particular chart is that this is an important higher low. I'm going to mark this level. This is an important higher low. Let's say if we want to see if the trend has changed or not, then in that case use this level. As per Dow theory, let's say if we are closing below this level, that means the short term Dow theory has changed. Intraday shorts can be activated, and that can be a big boon, because directional bias, yesterday there was a position where we could create a short trade. I was holding my strangle created yesterday, few more pairs in strangle, so it is as good as a call short. I have designed it in such a way that it's as good as a call short. So I'm utilizing that right now. I'm just making most of that particular move because market is not trending right now. I'm not expecting market to remain trending till probably the end of this particular month, and slowly gradually we are going to get into some decline, some kind of a decline, and eventually we are going to stay in this range of 18,700 to 18,500 is what I'm expecting. If it breaks below 18,500, then probably we are headed towards 18,200, but I don't think it will happen too soon. Now what do we expect from today's action? Primarily the target that we have discussed, and this chart I need to cut down on certain notings. Cool. So I'll focus on this area. So from the top, which we have got a recent top, I would say, or a recent all-time high. So from this all-time high level, 18,888. So from this level, the entire fall, the correction up till Monday, and from Monday to this today's Wednesday's action, if we measure this using a Fibonacci tool, Fibonacci retracement, so naturally from this low to this high, we are at a 61.8% Fibonacci retracement. So this is a very important level. If we manage to break and sustain above this level, 18,680, then we might be headed towards 18,770. If not, if we stay below this level, then very quickly we might drop down to 18,616 or maybe below that, so 18,550 or so. So we are still within the range. We are still within our range, weekly range. I'm just keep on moving this, but this is your weekly range. Okay, so in short, we will see some sideways to bearish action today, and not a very euphoric rally is what I'm expecting in Nifty. So if someone feels that weekly strangle has to be sold, we can always sell that strangle. So you can short calls of 18,800, 18,700. That can also be a good idea. Whenever I say that you can short a call, just ensure that you don't do it randomly. You need to find a high, and on a high you can sell those calls. So this is very simple and basic calculation. Just don't go by because I'm saying sell calls. So just don't go and short at 915. Don't do that. You must know your risk to reward. So the risk should be smaller and reward should be in your favor with whatever risk to reward concept that you use. Bank Nifty is at an all-time high level, and psychologically yesterday we discussed about 44,000 being a psychological level. So similarly this psychological level is now playing out, and we should see some steady profit booking, and again the price should actually drop between this zone. Again we should get the price inside this range is what I'm expecting. See, there is nothing spectacular going on right now in market. It will be slow profit booking phase for this particular period, and slowly gradually I feel that the bullish moves are getting capped, and as we discussed in one of the video in last week, the rallies are getting shorter and corrections are getting bigger. So this current correction was bigger than the previous correction. So do this next part of correction should be bigger than this correction is what my expectation is. But still we are at a very early stage, so we will take one day at a time. Okay, so the target of weekly 44,017 and 44,041, both these targets are completed, and now we can see some kind of a reversal. Again here the important level, I'll just remove these targets. Let's remove the clutter. See what we can expect. If this low is broken, then intraday shorts we can activate. So this level is 43,854. 43,854 or 850. So below this level we can create intraday short positions. Right? So this is how the trade will go. So far we are going at a steady pace. So things are moving in a better way. About the trading front, as I had mentioned, I have booked the January strangle and I have entered into February strangle because the pair cost is huge here. So we are getting somewhere around 350 rupees from this pair. So that 350 rupees is a very good premium to collect, and I have hedged it with 17,600 put and 19,700 put call. Again guys, remember I want to hold this trade probably only till January, okay, or I might wind this trade up in the first week of January. That depends on how the market is behaving from the current levels, and accordingly I will take a call on this particular trade. But if you look at the risk to reward ratio of this particular February strangle, yesterday I added 10 lots to this strangle. So what I have done here, yesterday while the market opened and was at a high level, I shorted 19,200 call. I added 10 lots of 19,200 call at 296 is the price, and from those level we are seeing now some decline. So all in all this trade is in profit. In this particular calculation, in this February strangle, I am not considering the hedged positions, because if I add my hedged positions here which are for January month, then this entire payoff diagram get bogged up, right? So that doesn't work like how I want to be. So this February strangle is there. See, we know our risk. What we have done, out of 350 rupees we are willing to sacrifice 75 rupees. So the net gain that we are going to get will be somewhere around 290 onwards or 70. So 270 onwards, 270, 275. So that's good enough, and that's how the trade is going to go on. See again here, if you see, the gains that we are going to get is about 16%, and I'll be happy making 8% out of this trade in next 1 month or so. So that's how the plan is, and let's see how this trade actually goes. I hope you like this video. So that's it, pretty much done for the day. Do let me know how you are trading currently and what kind of a trades you are taking actively. One more tip for the day, I would suggest that in this current low VIX environment, option buying is not as rewarding as it should be in a normal condition. So ideally you should avoid buying options, right? So that's it for the day. Thank you so much. I'm signing off.